Probal Sen is energy analyst at ICICI Securities. He's joining us right now to tell us what he's making of things. Probal, that last line which my colleague Sonal said, of course, this is Morgan's view that these recommendations, if implemented, could correct years of underperformance for city gas and upstream companies. Would you go so far? And to your mind, which are the most significant of the recommendations?
No, I think the immediate reduction in cost is, I think, something that is very, very welcome. But the pathway to free pricing and the fact that there's a fixed escalation that has been put in the cap does two things. One is it actually provides a stability to the pricing regime, which is one thing that has been really missing from both consumers as well as CGD companies' perspective for the last year and so, given the volatility in the in the weightages that are there in the formula. So I think the fact that there's now a clear visibility in terms of what the absolute maximum price could be is a very significant move, and it provides a lot of comfort in terms of how you sort of model for earnings and the visibility around the costs and margins for the CGD companies. So that is significant. From a free pricing perspective as well, the fact that there is a 3-4 window given, I think it's a very reasonable way to look at it. We have to sort of assume that in the next 3 to 4 years, obviously, the global macro can also become a little bit more normal than what we are seeing. And therefore, even at free pricing, the burden is not going to be, something that is difficult for the CGDs or the gas consumers to bear. So I think keeping that kind of a window, that kind of a leeway is very, very important. And it's an important measure from an investment standpoint. The third thing is that the minimum floor that has been put of $4 is also useful from ONGC and Oil India's perspective. If you look at it, they have said in their earnings calls earlier that their cost of production for the legacy fields is somewhere around $3.5. So at least having that comfort that your cost of production won't be breached, which has happened in the past because of anomalies in the formula, I think that is a comfort factor for the upstream companies as well. So there are some fears that have been raised that if crude prices were to soften, then the price competitiveness against petrol and diesel might suffer with this kind of a cap. But the fact is that the government has acted before. They have acted now in terms of correcting anomalies between gas prices and liquid fuel. So I see no reason why that should be too much of a worry. So pretty significant set of measures taken in the gas space alongside the tariff clarifications and the amendments made there, plus these moves. So I would say that, yes, there is a significant upside one can see in gas companies over the next 1 year.
By the way, just look at Bajaj Auto. It's a big miss in the November auto sales.